All right, so let me share my screen. Go over here and share. All right, so pretty much, um, let's Strat Lab. So over here in the community banner, this is the name of the community, Bollinger Momentum Traders. I'm a scalper. Um, my background, basically, I started trading in 2015, demo trading on Oanda. That was a book that I read about, I think it was options for for dummies or something like that. Uh, I'm not I'm not 100% certain on that. But see if I can find it. Let's see that different account, this account here, and it may be in here somewhere. Let's see. This is going to be books. See what we got. No, 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 no. It's in here. This one right here. So the options course. This is the first book that I ever read on trading. 592 pages. I read this thing from front to back in 2014. And then in 2015, January 2015 is when I started trading demo on Oanda. So this is the uh, book that I started reading that got me interested in trading. Uh, so back over here. So basically, what I did was I demo traded from 2015, January 2015 to March of 2027. So that's about 27 months. Um, and so from there, I went live, got into, started looking up people online, mentors, looking for mentors and things like that, and came across a group. That group basically was a offshoot from an MLM company. I've never joined an MLM company or anything like that, but they were an offshoot from an MLM company. And so the strategy that the guy was teaching, I guess it still works because that's somebody that I know that, still trades that strategy and everything since 2017, 2018, something like that. So he still trades that strategy and has a following, a community and everything or whatever. But uh, this is a strategy that I kind of researched and started following and started having success with was this Bollinger Momentum strategy. And so I'll get into that here shortly. Um, and so one of the things that I've added to the Bollinger Band strategy is this right here. So these continuation patterns, or whether they're bullish or bearish, right? So I've added these patterns to this strategy as well. And so, but pretty much what I look for, I can go to the charts over here. Uh, so pretty much what I'm looking for, and uh, I'll just go through this here. So I start my analysis on the 1 hour chart. And so as of right now, 1 hour, we are prices above the Bollinger. This is a zero point 0.5 Bollinger, prices above. And so because price is above, I would be interested in looking for buys. Based on that, that's the first thing that I'm looking for. Then second thing I'll do is I'll drop down and look for a consolidation, which you can see right here on the 30-minute. Drop down to 15. That consolidation is still holding. We have a breakout, retest, and then a continuation. And I'll drop to the 5. You can see it better. So right here on the 5-minute chart, again, like I said, looking for that consolidation. I already know that my bias is looking for buys on the day. Okay. And so now we have this consolidation. Price is just bouncing around in here. We have a breakout. There's no real volume going on right here. we have the retest, and then the continuation here. And so this is all before market open. And so we're looking for that continuation right here. As you can see, 8:30 Central Time, 9:30 New York time. Volume steps in. The candle is a huge candle. So those two are in alignment with each other. And so based on that alignment, then it's time to enter the trade. Uh, you can enter based on that momentum, or you can wait for a retest uh, of the Bollinger Bands. And so if we wait for the retest of the Bollinger Band, then you're saying here you got another consolidation push up. So that's a rally base rally. Then you have a consolidation at the top here, a pullback into the Bollinger Bands, and then another consolidation, and then it just keeps pushing to the all-time high on this index, right? If I drop down to the 1 minute, we can break it down even further. So uh, here's a 1 minute chart. Again, that's that consolidation that we were in. Here's an even smaller consolidation with the breakout with volume right here. Okay. And so then it broke, it's headed up, comes back into the box, and then it keeps going and it breaks out again. And so right here, we have the breakout, then opening bell, 8:30. We have good volume, a good candle, uh, solid candle. And so this would be the entry right here. So once that candle closes, then we're entering that trade. We are above the Bollinger Band. We have an EMA here, color changing EMA. And I can just drop this down over here. EMA plus, see if we can find that for you. Indicators right here, colored EMA and Bollinger Band. So those are the two that we're using. And so the price is above the Bollinger Band. We have the colored EMA where it's changed uh, in the direction that we want to be trading in. Uh, we can see volume drop off a bit here. Price is still going up. We have another strong candle, and then we have volume dropping as well. And I thought I had saved this. Let me see. Where is it? Oh, all right, this one. All right. So right here, we can see volume is dropping off. All right. And then we got a red candle. And this red volume, we look at the candle, it doesn't match, right? We have strong volume, but we have a weak candle. So we're not getting scared out of the position, anything like that. We're staying in this position. And then from there, you can see volume declines as again. And then we have a strong bullish candle, volume with a strong bullish volume with a strong bullish candle. And so again, it's breaking out of that consolidation. So this will be a scale in opportunity right here. Scale in, we get a pullback, another strong volume and strong candle. And so then if you want it, you could take a third entry. But with that, this is the strategy where you have the consolidation or the base, rally, base, right? And so then once we get over here from this uh, volume here, uh, volume kind of gets weakened, and then we get a bullish uh, volume. And then if we look at the candle, it's a weak candle, right? We're trapped in this consolidation. We break below the Bollinger Bands here. As you can see, the entire time here, we are above. We are above. And then, as you can see right here, we break below uh, the, we break below uh, the box. I'm sorry, we break below the Bollinger Band. So, and then volume is weak as well. And so this would definitely be our entry. I mean, our exit right here. So Uh, we stayed above the Bollinger Band the entire time, and then we came below on the opposite side, and so we would be getting out. Right here, this consolidation came back into the Bollinger Bands, but it didn't cross over to the opposite side. So we're not getting scared out of the position, anything like that, because volume isn't as strong. Volume isn't above the moving average down here, and so we're not getting scared out of this position. We're staying in this position, and then we're riding this up until we see price break on the opposite side of the Bollinger Band. Uh, if we stayed in this trade the entire time, all the way up to the high right here, and it hit, then that is for a 4-to-1 trade, pretty much. And the expected move was 500 or $5.81, which equates to $581. Uh, Depends on what you're trading, forex or options contracts. Uh, just depends on what you're trading. So, but that's a $581 move. And so then with this breaking, this is basically showing, okay, we're on the opposite side of this Bollinger Band, and then price is trying to break out of this consolidation. It breaks below. So then that's a signal to go short. And so if you miss that signal and you came here, when you got this base right here, you could say when price breaks below right here, you take the trade immediately once price breaks, and then you're riding it back down to the consolidation, the previous consolidation area, which was over here, right? And 50% of that is going to be that first purple line. And then you can go to the bottom of that, and that's a full move as well. And so if we look at that, we're looking at from here to here. That's $187 move right there. Uh, Again, from over here to up here, that's a $581 move right there. Okay. So looking at the higher time frame, going to the 5 minute, just checking to see what's happening here. From that consolidation on the 1 minute, then we have price rejecting this box, right? We pull this over. We have price rejecting this box back to the upside. We have price rejecting. We have price rejecting again, bouncing off, rejecting again, pushing up. And then it's inside of the Bollinger Band. There's no trade as of yet. Some people would take that trade just because of the strength of that candle. But if we go back down to the 1 minute, this is at 10:10. Go back down to the 1 minute. All right. So on the 5 minute, we saw that rejection, pushing up, pushing up. And then if we look here, 10:11, nothing, 10:12, that's your entry right there. And you can ride that back up. If you ride that back up, you get your long tool. Boom. You put your stop here. If you want to be aggressive, if you want to be more conservative, you put your stop right here. So for me trading, I want to put my stop just on the opposite side of the Bollinger Band just to protect my protect my capital. So if price does decide to turn around and go against me, I can go ahead and get stopped out early and then take a small loss as opposed to taking a much bigger loss. And then this trade here goes up and it hits for, it's a 2 to 3, but it hits for $212. And so that's a second trade or a third trade if you took this short right here. But again, the position was bullish, right? So the trend was bullish. So some people would take this bearish trade. Some people wouldn't. With the stop being on the opposite side of the Bollinger Band, that stop is just too big for me. So that definitely wouldn't be a trade that I'd be willing to take to the downside. But if they did take it to the downside, right here at the first at the 50% mark, that would have been $127, and then down here again, like we said, that's $185. So almost a 1.5 R on that. This one is a 2.3 R, and then this one was a 4.15 R. So four R there, 1.5 R there, 2 R there on the day, and that's pretty much it as far as the strategy itself and how to trade it. All right.